Welcome to the Doctors Making a Difference podcast.
Well, today I'd like to welcome Dustin Karras onto the program, and it's excited to have Dustin. Today's a little bit different type of episode because usually we interview physicians, but in this case, this is more of the physician tools and resources ideas. So Dustin is a person that has a lot of experience understanding disability policies and physician-specific situation that we all kind of encounter. And I hope this can be a good episode to kind of go over some of the tools that all of us can use in our lives. And so, Dustin, why don't you introduce yourself to the audience a little bit and tell us a little bit about what you do?
Yeah, thanks, Peter. I appreciate the introduction. Happy to be here. I'm passionate about helping doctors make good decisions when it comes to finances. My company is called Pattern, and we specifically specialize in helping doctors with disability insurance and life insurance. But I personally have a liking for all things personal finance. And when it comes to doctors, they have a target on their back in this world from a financial industry standpoint. And so I get really frustrated and sometimes a little upset that doctors do get targeted, and they get poor advice. They get sold overcomplicated plans for insurance, for investments, for all these things. And I'm in the corner of let's keep things simple and very practical. And let's do what makes the most sense to get you on the right foot and have a good career in medicine without getting taken down by poor advice. And so that's my heart. I've been in the industry for 15 years now. Patterns existed for 12 years of that time. And so the whole time, though, been involved with physicians. That's our focus. We love doctors. They have a huge impact on our communities, on our lives. We've all had personal interactions with our own physicians and know that has a big impact on how we live our lives and the quality of our lives. So there's a passion there. But we also, I like looking out for the underdog. And doctors aren't normally seen as the underdog, but when it comes to kind of some of the more practical areas of life, sometimes they are the underdog because you've spent so much time in the clinical side of medicine, which is where we want your minds and your hearts to be. But sometimes what gets missed is the practical side of life, financial, legal, and otherwise. And we really want to look out for doctors in that way. If doctors are good from a practical side of things, it makes practicing medicine a lot more ease. So, when it comes to this whole idea of wellness and burnout, all these conversations that are out there, I kind of push back on some of the things that I hear in the physician world from a wellness standpoint, and some of the quote unquote practical things they get to do from let's meditate and let's journal about things. Like those are fine things, but a lot of times if you just do some practical things and take practical steps in your life to make sure you're protected, it eases a lot of your everyday life stresses, and it allows you to focus on what really matters because I think so often we get stressed out and we get overwhelmed by the things that we're uncertain about and are kind of just hanging out there over our heads. So that's why I like to keep things simple. Let's get things done. Let's take action steps and make everybody's life a little bit easier.
Oh yeah, well, and I think specific to physicians, we've talked about it on this program before, and I know it's something you focus on. You spend all this time in medical school, residency, fellowship, and you're trained, and you have a lot of experience on the medical side. But I think people sometimes assume that you come out and you're like, oh, you have this wonderful life, but you really are 10 to 15 years behind your peers when it comes to the time value of money and maybe the practical experience of having a job and saving for the future and letting interest work on your behalf. And then specifically to that, you have all this. I remember when I finished residency, I think, well, I've finished all this stuff and I'm an attending physician and I'm in debt up to my eyeballs and I have absolutely nothing. And
Right.
and you really are kind of in a tenuous position at that age specifically because you've spent all this resources to try to gain an education. And the thing that is going to make the biggest difference is what if you became disabled or lost your ability to do your work right at that time? You've got all the debt and really none of the income to justify it. So I think it's pretty important. And Dustin, I'll just preview on this. I've talked on this podcast somewhat about my own experience. I got a big 26 centimeter tumor, unfortunately. Thankfully, it was a benign type tumor. But at that time, 2 years ago, when I had that unfortunate diagnosis, it was kind of an eye-opening moment. In fact, I remember one of the very first thoughts I have is, okay, I'm probably going to die or be disabled. How's my family going to survive? And I was thankful that I had somebody give me the advice years ago to get some own occupational disability insurance, and I was thankful for what I had. But in that moment, in those weeks of extreme uncertainty, I wish I had more.
Yeah.
I wish I had adapted it even more as the career went on and the financial situation changed and became more complex. I wish that I had requoted it. And I don't think I realized that, hey, it doesn't have to be a permanent thing where you get it once and you never ever change. You can adapt and change and modify over time. And anyway, it's something, as we think about the financial part of this, one of the best ways to become a good doctor, I think, is to say, look, I'm not doing this because I'm in debt up to my eyeballs or I'm in financial trouble. I'm doing this, partially because it's a job and partially because I'm passionate about taking very good care of the patients who've entrusted their lives to me.
Right. Yeah, well, yeah, Peter, you have, like I said, the poster boy story for disability insurance. It's maybe not what you want to be the poster
No, it's
story
not.
of, but it's a fantastic story in illustrating and demonstrating why disability insurance specifically is so critical. And you already touched on this, but especially when you're a young doctor, I'm thinking in your last year or two of training. That's when you should really get serious about looking at disability insurance because, like you said, you've just invested so much time and money and energy in basically building your skills and your abilities, your brain. It's an asset that is up here, right? And in your hands and in your body. It's not something where you built a house and it's separate from you. It is you. You are the entity that is going to produce in the future. And so you've invested all that into yourself as an asset for producing income in the future, but you've also created usually a amount of debt. It's not uncommon for doctors to come out with $250,000 worth of debt from training and all of that.
Yeah, or more.
More, hands down. And and when it comes to those school loans, most of them aren't forgivable if you become disabled. In fact, I don't think any of them are. And so you're going to pay those even if you're unable to produce your physician level income. So that point in training into your first couple of years of your attending role, like you are highly vulnerable from a financial standpoint when your income is exposed, right? So, you know, we always say you can make amazing financial plans. You can have the best thoughts about what your rates of return will be and your investments, your debt pay down plan, building your dream house, all those things, like all those items are super great. But as soon as your income goes away, all those plans are getting scrapped and your lifestyle, it's probably not going to, stay the same. And also your family, your family has, expectations and they're living in a certain lifestyle, and you're going to be hard pressed to maintain that if your income goes away. So it's a really simple question. It's like if you don't get paid, are you okay? Some doctors, when they're, if they've done things right over the course of their career, by the time they're 50, 55, the answer to that is very well, yeah, I could survive just fine. I have investments that could, pay me. I have income sources from investment properties or my, any other income streams that they may have created over time. And you don't need the disability insurance, and that makes sense. But usually early on, 99% of the time, disability insurance is the most practical, efficient, and inexpensive way to cover that need, which is protecting your income, protecting that engine that produces income, which is you.
Yeah, one of the goals I think that every physician, probably every person should have, is to work toward financial independence. But you don't have it early on. It may, if you really are aggressive, maybe you could achieve it 15 years into your practice, or maybe I've heard of people doing it 10 years in. But a lot of times that's a 20 or 30 year into practice equation. And my own story, that diagnosis happened when I was 43, and I I think I remember we had paid off the last student loan. We tried to be really careful. I think we paid it off when we were 40. So we're back
Yeah.
to broke. My wife and I
Yeah.
said, look, we're going to be aggressive. And so we were about 3 years into saying, okay, we're going to be okay. We're going to set things aside and try to prepare for the future. But in no way were we financially independent. We're trying to be on that path, but it just takes a while. So,
It does.
and you always think that kind of stuff will happen to somebody else, but I figured I was a pretty healthy guy and exercising and eating healthy and doing all the things, and suddenly you get this big, crazy surprise diagnosis, and it's rare. But I guess I'm a little bit jaded as a physician. I feel like I diagnose cancer or other unexpected things all the time, and
Yeah.
we are pretty likely as human beings to experience something in our lives that leaves us disabled for at least a period of time. And so having a financial plan that takes that into account is critical. And I think especially if you've borrowed that kind of money against almost nothing, there's no real estate, or there's nothing that really backs that up except for you. And
Right.
so I think you're absolutely right, Dustin. This is an important thing to put in your financial house, to get your financial house in order, and do it fairly early on. And what would you think about, like, what do you say about that idea of re-examining it periodically as your income changes? I was curious what as you're an industry professional, what are your thoughts on that?
Yeah. Yeah. Our team, we reach out to our clients who have a policy every single year. We're always asking, hey, has anything changed with your income? Has anything changed with your job? Have your duties changed? Those sorts of questions we ask because it can have an impact on your policy, the main driver being income, right? So, anytime we see, we have doctors call in almost every day, hey, I need to change my address. Oh, why is that? Well, because I got a new job, I moved. Oh, well, if you have a new job, you probably have a new income. So anytime you have a movement in income, it makes sense to reevaluate your disability insurance. Anytime you have a family change, whether you're married or if you're, going through a divorce, unfortunately, or if you're having kids, like it makes sense to touch on, your life insurance, other estate plans, of course, too. But specifically with life insurance, you want to make sure all of your plans fit with what your current life stage is. And so, yeah, highly recommend reaching out because the insurance companies typically they're not always keeping tabs on these doctors. The doctors have to make known, hey, my income is now a little bit exposed because I've had an increase in income, and you're a lot of times your policy doesn't just automatically increase up to your current income amount. So, yeah, I would check in once a year or once every other year, even if you feel like nothing's changed, just to say, hey, here's my current income. Am I still good? Another big change that happens that doctors should prompt them to think differently is if anything changes with their group disability insurance plan. Group plans can change from year to year. If it gets too expensive, sometimes the employer will either dial back the benefit that's involved, or they may scrap a disability group policy altogether. Again, leaving you even more exposed and enabling you to increase a private disability policy. So those are the times I would say, hey, take the proactive step and reach out to the agent you're working with and make sure that you're covered as fully as you possibly can be.
Yeah. Another one, I've asked this question myself, and I've had other people ask me about it. One of the questions I have is, as you look at all the different policies out there, it especially, and I remember thinking this at the end of residency, like there's so many things. I'm so uneducated. I don't have any money, and I don't want aggressive salesmen to come and sell me something. I want to be
Yeah.
wise about this. How do you look at that when you say, okay, my options are, I have an employer-based a disability plan. I can use the American Academy of whatever specialty you are base plan, because a lot of those groups will offer their specialty specific in that regard, versus going to one of the large companies that puts out these disability plans. I know there's 5 or 6 of them that make own occupation disability plans
Right.
for physicians, and getting a private quote from them or from an insurance broker. I'd just be interested to hear your perspective on contrasting those 3 options that physicians have.
Right. Yeah, there's a lot of options out there. I'll say that. And there's good options and there's real bad options.
Right.
So, most physicians will encounter a group plan at some point just from their employer. A lot of times that is an involuntary benefit that you receive, meaning you don't have to sign up for it. You just get it because you're an employee. those policies are almost never physician level coverage because they're covering everybody in that employer's scope. So it could be administrative staff, it could be janitorial staff. Oh yeah, it's also including physicians who have significantly different needs and duties to cover than some of your admin staff, for example. So these policies are there's significant differences from group plans to association plans to your private true and occupation disability plan. So another example is I was on a call in the last couple of weeks with an association agent. They're part of association who sells the group plan for that. And I could tell even through that conversation with the agents that do this that there was they did not understand the type of coverage that they were even selling. And they believed it was a true and occupation policy. And I was like, well, what happens if the doctor becomes disabled, but they can be gainfully employed in another job? Will that benefit or the money you're getting out of that policy diminish if that person's income in a new job goes, starts to supersede the benefit? And they're like, yeah, it would offset. Well, then that's not a true and occupation policy. So there's even misunderstanding within the industry. So when you're looking for a DI policy, if you're out on the hunt and doing your research, you really want to find an independent broker who can look at all the true own occupation options out there, help you compare and contrast which option is best for you. And it's a personal decision that has to be made too, because whether it's your specialty, it's your age, it's your health. All those factors are getting taken into account, and that really can dictate which insurance company is the best route for you to choose, because a lot of these companies handle health concerns differently and all that. But kind of coming back to your root question, which is how do you sort through that? Anytime that you give something up, you're to gain something, you're probably not getting what you were hoping for. So with the group policy, a lot of times it's free. Sometimes association plans are free. It means you're probably giving something up. And the association plan that I was just mentioning, you're giving up a true and occupation policy. You're giving up a lot of times those policies, they can change the rates on an annual basis, meaning how much you're going to pay to have that policy in the future if you ever wanted it. They could cancel the policy at any time. Those sorts of things become options that the employer or the association have in order to keep their costs at a certain level. And so you're always giving something up. There's also something called guaranteed standard issue policies, and a lot of training institutions have these. And so what that means is that if you're a part of an institution that has a guaranteed standard issue and you have any sort of health condition, they will give you a policy without any medical underwriting. And a lot of times it can be a true own occupation policy, meaning the definition of what a disability is a true own occupation. So that's good. But they have to limit something because they're giving it to everybody, anybody and everybody, whether despite health status. So a lot of times they limit the max amount of benefit or the max amount of income that you could receive out of the policy. They limit that compared to other fully what we call underwritten policies where they are looking at your medical history. So again, there's a give and a take here. So if you're wanting the right physician level coverage, you're going to want to look for a true and occupation private disability insurance policy, ideally purchased from an independent broker. The alternative to an independent broker is a captive agent, and those agents usually are trying to sell an insurance policy or lean towards selling an insurance policy that they're associated with that insurance company. And so I won't name any companies that are out there, but a lot of times you can just look at the website that person's on, and if they specifically state a certain insurance company at the bottom in their disclosures, that probably means they're captive to a certain degree. Even if they can sell other policies, other companies, a lot of times they have to meet certain quotas to satisfy that insurance company's requirements to be considered a captive agent. So you want somebody that's truly independent so you can get a completely unbiased advice. And so that's where this whole thing gets sticky. You have a lot of people saying, hey, we have disability insurance available to you. And so there's a lot of confusion out there. And again, that's one of the biggest frustrations for me is that this is not that complicated, but our industry makes it complicated, and employers can make it complicated even if they don't mean to. So there's a lot of confusion and fog out there when it comes to that. So hopefully this is cutting through some of that fog.
No, that's really helpful. Dustin, I was thinking of my own experience, and I've talked to others who've had the same experience of having a product sold to them
Yeah,
rather than purchasing it on their own. And like you pointed out, at the end of medical school, you finally are at residency and fellowship. You say, okay, now I'm going to transition into a job that pays a physician's salary. And you do kind of have a big target painted on you
yeah,
because they know that you need these products. Most of the time, people have not taken a lot of time to do other education because you've been so busy for the last decade or so just in medical
right,
education, because it's an all-consuming process to go through that.
right,
But I would say if it's something being sold to you rather than you going and purchasing it of your own accord, you have to be a little bit careful because the motivations behind that person making that sale may not be the same as the motivations
hmm
that you need. And so I think my own experience, I remember I purchased a product at that vulnerable stage thinking, oh, I'm protecting my family. And it was not a bad thing, but it certainly wasn't the best thing. And I had to go
yeah,
back and revise and avoid there's traps to fall into things where we get into whole life insurance and different
hmm
things that are really not the best product for a physician. And I think
yeah,
and I don't know if you deal much with term life insurance, but that's my
hmm
understanding is the two best product to have at that vulnerable stage when you're in your 30s sometime and you finished fellowship or residency is to say, I have a disability plan that would actually replace my income if I became disabled and
right,
modify it periodically to adjust based on what your income does during those first 10 or 15 years. And then the second product is a term life insurance. Those are relatively cheap.
right,
You're more likely to be disabled than die, but if you had the misfortune of dying, you don't want to leave your family and your children or other people who depend on you for your income with no income source, because you've put them through a challenging experience going through medical school and residency, and then if you pass away, that they really are crippled from a financial standpoint. Term
right.
life insurance, you can get millions, $2 or $3 million policy for a lot less than you might expect. And so those two
Yeah.
products I think are probably the safest. But I was curious what your thoughts are, Dustin, as far as kind of getting your financial house in order at that vulnerable stage.
Yeah, I mean, from an insurance standpoint, I agree 100% with what you're saying. Yeah, disability insurance, like you said, you're more likely to become disabled in your working years than to pass away. And so, life insurance, it's well known. People understand that they need life insurance. A lot of times they miss how critical it is to have the DI side. But yeah, those two products specifically are what I would aim at locking down. Keep it real simple on the life insurance side. I went to a new physician, I think it was in September of this year. And, she was trying to get to know me a little bit, asked me what I did. I shared, I help doctors compare and buy disability insurance and life insurance. And she's like, oh, I got all that taken care of when I was leaving residency. I'm like, oh, that's great. And then she told me exactly that she was, she's like, I was probably taken a little bit. I was like, so she's like, I got disability insurance, I got a whole life insurance policy. And right when she said whole life, I knew she'd been taken. Because anybody who's trying to sell you a whole life policy, especially when you're in training or in your first couple of years of attending, uh, it's a huge red flag. Whole life insurance is incredibly expensive. They try to sell you on all these. I would say hopeful strategies to how you can use this policy. And again, it's one of those ways that our industry, I feel like, really shoots ourselves in the foot from an advice standpoint, is because, yeah, you can have all these great plans, but most doctors, they just need to keep things real simple and keep things inexpensive because they have debt to pay off and they have other more important things to focus on. So term life insurance, it's as vanilla as it gets. It covers you if you die for a certain period of time. So you can buy a 20 or 30-year term policy, and for that 20 or 30-year period, if you die anywhere in that period, it's going to pay you the death benefit. I mean, it's that simple.
Right, and get it when you're young and healthy, but because
Exactly right.
it's a lot more if you've had a tumor.
Yeah, hands down, and exactly right. So I have a personally, I just was upping my life insurance. I have a congenital heart issue, a bifascicular blockage, and 4 years ago, I had the same condition, and it was stated in my medical records. But I actually got a higher rating than I did this time, so I was a little confused even from
Hmm.
the insurance company. It was pushing back, and so I ended up applying for two different insurance companies, and one of them gave me one that was half the price. So to your point about health and making sure you're applying for a company that looks at medical conditions in more favorable ways than others, like the younger the better. Before you have any major health concerns, before you start having symptoms of health concerns, you want to be able to lock in those policies. But yeah, when it comes to whole life insurance, just the simple statement is just stay away.
Right.
There's way better options out there for your money.
Well, and I've talked to so many people who've had the product like that sold to them
Yeah.
as they begin their professional career, and not just doctors. I've talked to dentists who've had the same thing, and
Right.
anybody who's kind of been through a prolonged training process. It's you're just their ideal target because you're looking
Right.
for that. You know you need something like that. I hope that we can get the message out that it's better to just go buy a product that you know someone is working for you, someone that's not beholden to one specific company. Look at all the
Right.
products, and like it may not be a bad idea to use the one that's offered by your employer or your affiliation with your association, but I would say that may not be enough, so it's probably better to look at all the different options. And the thing that I've kind of discovered, Dustin, like we talked about, is my career has been so busy. I got that product and you just tuck it away and like, oh yeah, I did that. And
Yeah.
then, at 43, I was like, oh dear, I haven't looked at this for the last 8 years. Maybe I should have
Right.
probably updated this or modified it as my financial situation has changed over time, just everything, because those numbers
Yeah.
kind of remain fixed. Once you underwrite a policy, there might be a little bit of adaptation for inflation or things like that, but the product remains fixed as it was, and you're
Right.
not really punished by looking at that again down the road. And that's something I kind of had failed to realize, just because as in my mind, I'm like, I've got that done, and we're now working on everything else and trying to achieve financial independence. But when you actually need the product, you want it to be adequate for the need it was intended to fill.
Right, right. Yeah. So yeah, in the end, it is your responsibility, right, as the physician to make sure you're fully covered. But the agent, if you have a quality agent, they should be, checking in with you on a regular basis, making sure that you're taken care of, that you're covered fully, that your policy's doing what it was intended to do from the beginning, and it's fulfilling why you bought it. So that is a big thing. Kind of coming back to your point about it keeping up, there's a feature on these policies. All the insurance companies have different acronyms and call them different things, but it's a future increase option. And basically what that does is when you're a younger doctor, you signed your first contract or you even got a policy while you were in training, they'll give you a small, relatively small benefit amount to begin with. But a lot of times you should be getting that future increase option put on your policy, which enables you in the future to increase your policy as your income goes up without going through additional medical underwriting. So it's one of the linchpins on why we say you should lock in some level of coverage early on in your career, uh, best when you're in training. You're never going to be healthier or younger than you are today, right? So lock it in as soon as you can, and then you're also locking in that option for future increasing of that benefit amount to keep up with your income, and then you don't have to worry about your health changing. It's one of those things that, man, we've seen it. I feel like this last year we've seen so many young physicians that have had things come up. We've had a couple doctors, young female physicians that they've had cancer. I mean, the one was late 20s, one was early 30s, and these are things you don't see coming. We have another gentleman who, this was in September. He reached out to us. He just got his contract signed, and he was about to be going into his attending role. He hadn't actually done his boards yet, and so he was prepping for all of that, and in ER doctor. And he just finished increasing his policy to match his new contracted income. And literally a month later, he gets a super rare disease that causes paralysis in the legs. So he's probably not going to practice as an ER doctor at all.
Mm.
But now he's got a benefit that's going to pay him for his entire career through age 65, at that same level, increasing for inflation over time through age 65. So he protected what he had invested already in. So we've had lots of those stories this year where it's just, these doctors are so grateful that they took the action. And sometimes these things don't ever happen. And sometimes they happen. Like for this gentleman, it took place within a month of him locking in that higher benefit amount. So earlier the better. You just never know what's going to happen. It's unpredictable. So,
Well, and I another one I was going to quiz you about. I'm familiar with the situation where a gentleman finished residency and came into his attending income, hadn't really done the financial things, just thought he would do that in his early attending years. Also had put off a lot of healthcare things, and so
yeah,
went through a bunch of tests and like now has four or five different healthcare related issues.
right.
And then so he's like, okay, now I've got all this stuff I've been waiting on. Now I'm diagnosed and being treated for things. Now I'm going to apply for disability insurance. And guess what? When he went to apply, they say, well, hey, now you're high risk because you've had the diagnosis of X, Y, and Z.
Right.
So one of the things I was going to ask you about, what about in you're very poor in residency, at least there's a lot of demands on your time and you're working a tremendous number of hours, and for an income that is relatively low compared to the number of hours you're working, and you
Yeah.
can't really afford a huge disability plan. And so that might be the ideal time to do it is as you're in residency, and then modify it or adapt it as you start your attending years. I was curious what your thoughts are on that. And, quoting a
Yeah.
policy in your residency years and updating or waiting until afterwards.
Yeah.
Walk us through that.
Yeah, again, any day you wait, you're stepping into another day of uncertainty, right? And so that's just the nature of insurance, right? And you're trying to cover for uncertainty. So again, earlier the better. When it comes to the strategies for doctors who aren't making a lot, especially in your early years of residency, there's a lot of things that we can do from a building your policy in a certain way. So we can get a very low benefit amount locked in into the policy, and that keeps the premium low. And there's also a couple insurance companies out there that have the ability to grade your premium. And what that means is they start you off at a really low premium, and then each year it ratchets up just a little bit. That's called a graded premium. We always suggest as soon as you're able to, you change that to a level, because in the long run, it makes sense to have a level premium.
Yeah.
But when you do a low benefit amount and you stack on the graded premium option, that really makes that premium very budget friendly. And it gets your foot in the door with the disability insurance, because again, when you buy that small disability insurance policy, you're gonna add on that feature, that future increase option feature, that's going to enable you to increase that benefit amount in the future to align with your income. And your health conditions or your health status at the point of you buying that policy is locked in into perpetuity. So it's a huge deal to do that early and to make sure you get that increase option on the policy. So that would be the strategy I would say for young doctors, early residency physicians, PGY 1 through 3 or 2. Take that strategy, and then usually by the end of residency, you're going to want probably your 5,000 per month of benefit policy. Now, before that, you're probably looking at 2,000 to 2,500 per month of benefit that you're wanting to secure and get, basically a starter policy, if you will. So, yeah, there's a lot of different things that we can do and some levers that we can pull to keep things a little less expensive on those early years.
No, it makes sense because
Yeah,
I admit to being pretty much uninformed during my residency years. I just hadn't
yeah,
really even thought about it. And unfortunately, that meant I was vulnerable to have a product sold to me at the end. And I think as I talk
right,
to people, everybody's kind of the same boat. You've just been through it. You're young. You don't even think about your health. You're trying to just make it through. But I'm telling you, as a person who's gone through this is a pretty important. And if I was 63 when that had happened instead of 43, it would have been a
right,
different story. You say like, well, hey, I've saved, I've gone through a career, my kids are grown, but goodness, I had an 8-year-old at home when this happened.
right.
Like this is my family depended, still does depend on that income, and I'm so thankful that I've been able to return back to health and practice like normal, and have not had to use that product. But in that moment, when it actually comes down to it, you want to have those things in place. And so it sounds like there is a tool to get that in place when you're on a much lower income in residency situation, and the
Yep.
ability to ratchet up. And if your health is still good, you could underwrite a whole new policy, or whatever is appropriate for you at that time. but
Yeah.
there's a way to get that product in place even at a younger age or a lower income status.
Right. Yeah. I mean, the locking in your health status is such a huge deal. The other piece of that is when you get a policy earlier in residency, you're locking in your the rate for your occupation that you are currently in. So if you're if you're planning to sub-specialize later in residency, and into fellowship, if you had locked in your policy earlier on and say where you were in an internal med kind of status from an occupation standpoint, that rate is going to not change even if you subspecialize clear to becoming a neurosurgeon. Your rate stays the same for that policy, but it's covering you for the specific duties of whatever occupation or specialty you're doing at the time of disability. So even though when you were first in residency, your duties were significantly different than when you're out practicing as a neurosurgeon, you are now being covered as for neurosurgical duties with the same exact policy you bought early in residency. So again, it's saving money into the long run too, because as soon as you subspecialize, a lot of times the rate class that you would be buying at that point would be different than what you were buying at earlier in your training. So another, kind of quick hack, if you will, for disability insurance,
No,
especially if you're
all
planning
these
to
nuances are
subspecialize.
are pretty important to understand. What
Yeah.
do you say to the person who's okay? They're in their 40s. They've not really done this, and they've got a product that maybe like a whole life insurance policy, or maybe they have nothing and they're just kind of been winging it. Is it too late to get disability insurance? How long should a person? I mean, ideally, the earlier the better. But what if you
Yeah.
say like, "Hey, I've 15, 20 years into a career, and I just thought of this. Is it still
Right.
possible? Is it affordable? Kind of walk us through that career stage when people are
Yeah.
there."
It's a good question. Yeah, I mean, it's obviously going to be more expensive when you hit, mid 40s and 50s. We've had doctors that are 55 reach out to us to try to, get a policy, and they were able to get it. It all depends on, what your financial status is. You talked about financial independence earlier. If you're financially independent, meaning if you went without a paycheck, your family's fine, then, I'd be asking myself the question, do I really need this coverage
Right.
on me? So the real question is, what happens if my paycheck goes away? If my family would have to make significant changes that I'm not willing to stomach, either from a lifestyle standpoint or to fulfill a financial plan, whether it's education, retirement, asset accumulation, all those things, because my income went away. If all that would change too much, then I would certainly look into disability insurance. You can always get insurance quotes for free. Like that's super simple. And you can see where things sit. And then you can dial it into, maybe you don't need to cover your whole income anymore. Maybe you just need to cover for part of your income so that you maintain a certain level of income stream coming in if you were to become disabled. So can you get it? Yes. Is it harder to get? Probably, because something probably has changed with your health, and certainly it's going to be more expensive than when you were 30 years old. Each year, maybe I already said this, but it's about a 3% increase in premium each year you wait. And so again, that adds up over time as well. So, and then when it comes to whole life, if you bought a whole life policy when you were 30 years old and you're 45, like, I mean, I can't give specific advice on that, without knowing somebody's particular situation. But, I'd probably still look at getting a term life policy and getting a term life policy in place, and then I think about potentially eliminating that whole life policy. But I don't do that unless you talk to your agent first, because
Well,
the last
right.
thing you want to do is get things out of order, cancel a whole life policy, find out you can't get life insurance, and then you're without any life insurance. So,
Yeah, and I've heard of
um,
that story too. Like if you have an
yeah,
insurance product and you say, "Hey, this isn't ideal," yeah, don't change it unless you have another
right.
plan. It's like generally you don't quit a job until you've kind of got something else lined
Yeah,
up, kind of the same sort of thing.
exactly right. Exactly
Well, no, that's
right.
that's been I think
Yep.
that's a good thing to kind of think about. And for sure this episode is targeted to those who are in training, early career, and ideally, you're in your 30s, you're in your early 40s, and kind of get your house in order. But a lot of times, life
Yeah.
kind of sometimes life doesn't follow a specific plan, and it sounds like there are products available for individuals no matter what stage they're in. I was thankful
Yeah.
I wasn't really good at the disability insurance until the end of residency, when kind of started thinking about it. But I was thankful somebody told me about a term life insurance, years before that. I
Mm,
think I had a coworker who said, "Hey, you ought to get this. It's only, it's a, I don't know, 10 or 20 or maybe $50 a month, and you have something that would
yeah,
protect your income, if in case you died."
right.
And it's expensive enough at that stage of life. Like it sounded like, ooh, $50 a month. That sounds really expensive. But the peace of mind that came from saying, okay, if I passed away, my spouse, my children would be okay. I mean, that's an important piece of, I think, just financial planning for everybody.
Yeah, no, it really, I mean, that's why you do it. You do it for your family. Disability and life insurance, it's, especially for life insurance, you don't benefit from it
Right.
other
Yeah.
than the peace of mind, I guess, while you're alive, but it's for your family, right? You want them to be able to live and be able to send kids to college. You want to be able to pay off all your debt. You want to have income into your spouse's retirement. You want all those things to still happen even if you're not around. So it's of critical importance. And we always recommend doctors, they again get term coverage. Don't look at permanent coverage. It's not necessary for 99% of physicians. Um, and typically I would suggest getting a 20 to 30 year term policy, something that takes you out over retirement age, for sure. Uh, Hopefully by the time you retire, you're financially independent, and so then it gives you a little ease as far as how much coverage you have. Um, and then typically we recommend getting between 10 and 15 times your income from a death benefit amount. So if you're making, $300,000, we would recommend getting at least probably $3 million of coverage. And then there's some strategies in there. You talked about cost being, it can get expensive. There's different ways you can, what they call ladder policies, meaning that you can get a 10-year policy for say $1 million. You can get a 20-year policy for $1 million and a 30-year policy for $1 million. And so it kind of averages out some cost and brings your cost down. But it's also taking your coverage, and you have at least $1 million for 30 years, $2 million for 20 years, and $3 million for the next 10 years. Where it's probably most critical when you have kids that are still needing to leave the nest, go to college, and all that. So there's again different strategies that you can implement that get you the amount of coverage you need, but keeps it at a cost effective strategy. So, but again, term insurance.
No, I think
Yeah.
it's important. Like these tools, we talk about them in the abstract, but it happens all the time. And
Yeah.
I don't think that we should. I'm not trying to inspire people to feel panicky or like, oh my goodness, I'm going to have a tumor tomorrow. I got to get
Right.
this in place. But we're mortal. We die. Our bodies
Right.
break. That's why we're doctors. People
Yeah.
break, and unfortunately, we're just as susceptible to disease as anybody. And it's
Yeah.
important to have that financial plan. And I think to what you alluded to earlier, one of the things I'd like to emphasize on this program is not only the important role that physicians play and the difference they make in the lives of others, and but my hope is to inspire people to stay in practice and don't leave medicine, but get
Yeah.
your financial house in order so that you're on the path toward financial independence. And after a while, you're not doing medicine because you're scared or because you're worried that things are going to fall apart in your family if you don't work. You do it because you're passionate about taking care of others. And if you can save carefully and have some of these financial tools in order, I think it's very practical that by the time you're in your late 40s or mid 50s, you can have that financial house in order. And then the
Yeah.
insurance products are not the thing you're worried about as much because you say, look, I've got things in order. And if I couldn't work, it doesn't matter too much.
Right.
But
Right.
early on, especially in your 30s and 40s, I would argue, you still need those products very much in place because there's no other system that's going to like really pick you up. If you went
Right.
on Social Security disability, you have that and it would help you a little bit, but it would not help you cover the costs that you've accrued as a physician, or certainly wouldn't maintain the lifestyle that you may have come to expect
Right.
as a doctor. So
Yeah. Right.
it's quite important for sure.
Yeah. Yeah. I like to talk a lot about on social media about just physician financial independence. You have the whole, again, side of burnout that is happening. a lot of kind of the new number I've heard is that doctors are kind of making a plan as soon as they get into their attending job to be in the job for only 10 years.
Mm.
It used to be 15 years. That was probably about 4 or 5 years ago when it was about 15 years is what they were aiming at. So you don't have doctors that are, aiming for retirement age anymore. And so part of this financial independence equation is to get you to a place where you have options, right? And as soon as a doctor has options, your stress goes down, you're less likely to become burned out because you kind of can say, I'm done with this and actually either go to a different role or do something completely differently. So it gives you those options. But ideally, you do want doctors to be doctors. They've invested so much of their time, their energy, especially if you're in a smaller community. Like you have relationships in that community, and people look up to the physician in those worlds. So there's a huge and massive impact, I think, that doctors don't recognize. That they're making into the longer term future as well. So yeah, I'm with you. I would love to encourage doctors to stick with it a little longer, but I also get that there's factors that are burning out there. Whether it's your hospital administrations, you got the health insurance side of things that's really burning doctors pretty good. All these factors that are harming doctors. But as soon as you can become financially independent, it gives you options at least,
Yeah.
and it allows you to dictate your life, your destiny, without being dictated by the hospital administrator or the,
No.
the insurance companies.
It's well said. I remember I went through a period a few years ago. We had some challenges with our hospital administration, and I remember my brain would just keep going back to that. Like, well, I just got to get this. I've just got to get out of this as quick as I can. I got to figure out a
Yeah,
way to not have to be beholden to these people. And my first thought was like, okay, you just have to figure out a way to retire early and get out of this.
yeah,
And as I went on and thought about it, I was like, I became a doctor because I like helping people. I would like to
right.
do this as long as it's reasonable for my health and my family to do it. And so I think I've changed my focus somewhat to just like, kind of go back to where I came from to say, look, I want to do this because I care about people, but I also want my financial house in order so that when someone asks me to do something that I don't think is reasonable or appropriate or even good for patient care, I
Yeah,
can just say no. And if they say, hey, we want you to do this or you lose your job, then you say, well, that's not really the biggest factor in my life. There's lots of
right.
jobs. And
Yeah,
ideally,
exactly right.
we would keep physicians because if we play the financial cards correctly, you're no longer are trying to say, I'm out of here. I'm getting out of medicine in 7 years. I want to be out of it. It'd be a lot better to say, I'm gonna practice into my 40s and 50s, maybe my 60s,
Yeah,
because I enjoy it, and I'm gonna do the things that make the biggest difference for my patients. But insurance issues and administrative issues and stuff that just drives doctors crazy. You can kind of say, well, I'm a little bit insulated from it because I want to do this because I'm the one with the medical degree. I'm the one I'm
right.
the professional here, and I don't want all these outside forces dictating to me. And I think that lack of control is what drives a lot of the burnout. And so that's why I
Yeah,
want to focus on the financial side of our industry, because I think that is the thing that gives doctors that independence, and that these tools help people become better doctors. I think you're a better physician if you have those tools in place, and if you have a financial plan that makes it so you don't worry so much about the finances.
yeah, exactly right. And I think the word that you said was control. I think that is so key. When doctors feel like they don't have control, that's when problems set in and become really bad. And so, yeah, let's handle the things that you can control. Then, you can make a plan for your finances. You can take financial actions. You can make sure that your legal documents are in order. Your estate planning is done. Like you can make those plans and you can have control over some of those items that prevent something more catastrophic happening. And then it takes that kind of off your mind's plate and enables you to focus on what really matters, which is doing what you were gifted to do. God gave you the ability to doctor, to have relationships with patients, and so you want to clear the plate as much so you can focus on what really matters. To your point, so I
No,
like
that
that.
makes perfect sense, Dustin. You've answered my questions, and I really appreciate it. Do you
Yeah,
have any other thoughts for our audience? Any other last minute things you'd want to share with the group?
sure. I mean, you know, my MO is keep things simple. Um, again, doctors they're constantly being sold, and so just keep in mind that there's only a few things you gotta you gotta do. You gotta protect what you have, and you gotta make a plan for where you're going. So if you can just cover those kind of two ideas and start with the protection part because it's the foundation of everything you do. You want to make sure that anything that you do on top of that from a planning standpoint is protected. So life insurance and disability insurance is what I mean by that practically. And take care of these things as early as you can. That's the biggest piece of advice I can give you. Do it early. Lock in your young age, your health, and make sure that you can actually have this product. Tomorrow you may not be able to because something what you feel like is small can really have an impact on your ability to get coverage. So yeah, just keep things simple. Keep your head up when you're practicing, and know that even though there's a lot of systemic things that are kind of pushing back, there's people like us out here that love doctors and want to see you thrive. So I'll leave it at that.
Yeah, appreciate it. Dustin, thank you so much for going through that and taking the time. I really appreciate it. I think that our audience will love this episode. And so thank you so much.
Awesome.
I'll talk to you later. Thank you.
Sounds good. Thanks, Peter.
Thanks for tuning in to the Doctors Making a Difference podcast. And thank you for what you do to help your patients and your community. Your work truly helps so many people. We produce this content to help you have the tools you need to stay in medicine and to highlight the amazing work being done by physicians around the world. Please check out more of our content on our website, doctorsmakingadifference.com. Also, please follow, like, or subscribe on your podcast player or YouTube channel and give us a 5-star rating. It really helps spread the message. Finally, if you'd like to be a guest on the podcast, or if you'd like to nominate someone to be a guest, please visit the website or email me at admin@doctorsmakingadifference.com. See you next time.